And
For
so what we
sure.
saw was this huge influx of Bitcoin onto exchanges that appears to be the intent was to drive the price down aggressively to liquidate gamblers or option traders from their positions, cause the price to fall down, scoop in, buy it up, and leave. And so we saw an influx of a huge amount of capital and an outflow of the exact same amount of equivalent capital, but at a lower price.
Welcome to the Disruptance podcast. Here are your hosts, Eric Forney and Michael Bounds.
A lot of listeners, you guys have been messages, sending us messages, and you guys have really kind of geeked out on crypto, and so we want to implement what it is that you guys want in us to cover. We want to do a better job of that to serve you guys. So we want to have Eric kind of answer some questions, a quick question and answer about crypto and what's going on right now. So yesterday there was a dip in crypto, and so tell me, what was the genesis of that? What caused that?
Yeah, I mean, and Mike, I mean, to say dip is putting it really lightly. I mean, I would say it's a freaking cliff that got driven off of. I mean, what a mess. Market for crypto went from like about 2.5 trillion in total market value, and 1 trillion just disappeared pretty much in a 24-hour period. So we're talking about the entire value of a company like Google or Apple or Tesla just disappearing in 24 hours. So massive, massive cliff that the entire uh, crypto and blockchain market went through in the last 24 hours. So what caused it? Well, there is always an endless amount of speculation as to what led to this flash crash that we went through. At the end of the day, the most likely theory, in my perspective, was a competition of whose dick is bigger. At the end of the day, it's it's a contest around who can take more money from everyone else. It's along the lines of wealth. How do you get it? How do these institutions or whales, as they're called in the crypto market, how do the whales acquire more market share and more crypto assets? Well, the easiest way to do that is by having a big bag of money to start with, and then utilizing like the derivatives market or the options market. So to distill that down a little bit, let's say that I'm betting long that Bitcoin will stay above $40,000. And so I take a long option on the value of Bitcoin in the future. I'm paying a premium to take that bet. And as soon as the market pulls back below my $40,000 option bet, I'm going to get liquidated. Whatever the premium was plus whatever amount of capital I put up on the front end is going to get completely wiped out and liquidated. And that should happen automatically. And so imagine if I had $2 to $10 billion. I could go in and acquire assets, and then sell them quickly, like, all at once, for instance, if I wanted
Right.
to, and just completely degrade the pricing and collapse the market value in that moment with the goal of driving the price below my $40,000 gamble. And
For
so what we
sure.
saw was this huge influx of Bitcoin onto exchanges that appears to be the intent was to drive the price down aggressively to liquidate gamblers or option traders from their positions, cause the price to fall down, scoop in, buy it up, and leave. And so we saw an influx of a huge amount of capital and an outflow of the exact same amount of equivalent capital, but at a lower price.
Was that,
And
do you feel that that was coordinated, or was that something the one guy did?
Yeah, that's tough because that's the cool part about blockchain and the and arguably the disconcerting part about blockchain is that it's public, right? You can see the inflows, you can see the wallets, the public ledgers that are making the moves onto exchanges. What you can't tell is whether it's coordinated because you don't really know who has what. Just imagine there are account numbers that have no names attached to them. So there are these account numbers, wallet addresses that are moving money onto exchanges and then quickly liquidating traders, buying back and then exiting. And so when you think about how Bitcoin, to piggyback on our last conversation, Bitcoin, the reason it's valuable is one, it's decentralized, it's owned and controlled by no one, and it's scarce. 21 million ever will be mined into production. Right now, we're at this phase where we're seeing the production rate of about 6.5 Bitcoins mined, and so the next halving cycle in what it will be about 3.5 years will cut that rate in half, and it will become even more scarce. And so the price gets driven up by controlled constraints of scarcity. And so the fear is that if you have a lot of money, how do you get your hands on as many of these scarce, valuable resources as possible? Well, the easiest way to do it is to liquidate those that don't have diamond hands. And so that's what we saw in the last 24 to 48 hours is this forced liquidation for those that were willing to cave under the fear and the uncertainty and the doubt that happens in the media around China is not going to now be accepting cryptocurrency. That's interesting. They've put out that exact same headline 5 times
Yeah,
in the last six
yeah,
years. For
yeah,
5 freaking times, they put out that headline for 5 years in a row. It's fantastic for getting weak paper handers to discard their crypto.
yeah. So what do you do now?
Well, so I think when non-financial advice, of course, what do I do now? So what did I do yesterday? Well, what I did was I took a step back. And the step back that I have is do I still believe in the long range vision of the project and concepts of blockchain? Do I still believe in the technology of blockchain and what I believe it will afford, not necessarily to America, but to the world? And I say that because I think that if you're a maximalist on the concepts of cryptocurrency and of blockchain, you have to understand that 40% of the world is unbanked. 15% of people in Ethiopia have identification. That's it. 15% of people have ID in Ethiopia, right? And so Ethiopia has committed to IDing their school children on the blockchain, where it is not corrupt against authority or power or centralized corrupt actors. And so when you understand what it can do for countries that are not exclusively America, you believe in the long range vision of the project, which means I believe the value of the entire sector goes up. The same way that people believe that the internet was valuable in 1995 is if you believe that streaming TV will become a thing in the future, you would have been foolish not to buy Netflix if you had that conviction. And so when I take a step back, I still realize that I believe in the end in mind, and that end in mind is still the value going up. And so I hold what I have despite the massive, massive loss in value, realizing it's paper value, right? So if I wasn't planning to liquidate, it didn't matter if it went down. It doesn't matter if it goes up today either. I'm not planning to cash it out. So it
Right.
has no short run immediate impact. And then I look at the fundamentals. Did the fundamentals change? Did 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 Satoshi Nakamoto come out publicly and disclose himself and that the contract could actually be corrupted? No, he didn't. So nothing changed other than the price. And I wasn't in it for the short run price anyway. So you buy when it's on sale if you can. You dollar
It's an
cost average.
opportunity. It's an
That's right.
opportunity
That's
to
right.
average it out over the. You've paid X for this, and you paid Y for this, and you average them out, and that's what you got.
And you know what? There's a great opportunity when the market is down to actually harvest some tax losses also. If you have the opportunity to lose money in investing, sometimes it could be a good thing because, I'm not an expert on this, but in theory, I could sell something, wait 31 days, sell it at a loss, wait 31 days, buy it back, and take the tax loss.
Yeah.
So there are ways to put a plan together that, like in a market like this, if you're down in the red, you can actually still come out ahead with a long-term, long-range strategy in mind. Especially when you just remember either you're convicted or you're doing it for a short pump.
I'm a
And in my
listener.
case, I'm long range.
Well, I'm a listener. So I'm a listener, right? I'm
Yeah,
listening to you. I've got Bitcoin or cryptocurrency, or I want to get into
yeah.
cryptocurrency or Bitcoin. What is your advice?
So I think what do you do next? And the concern is like, are we too late, right? The concern is,
Are we
okay,
too
well,
late? Yeah.
yeah,
Okay.
like it's $41,000 or something right now at the time of recording, and are we too late? And I think when you have the long range perspective in mind, you think about scarcity, and you think about inflation, and you think about the concepts of human corruption and the fact that we're fallible as humans, and part of being human is to be fallible, right? And so when you think about the long range view, if you have the ability to invest with a long range perspective, dollar cost averaging becomes a fantastic way to get into a market. Maybe that's $100 a day. Maybe that's $10 a day. Maybe it's $1,000 a day. Maybe it's 10,000 a day. Um, you know, the common belief is 50% Bitcoin portfolio, or with a 25% Ethereum and a 25% altcoins, whatever that is, whatever your strategy is. Dollar cost averaging is a great way to enter the market. Um, and yet, if it's 10 years from now, the market will be up 10 years from now, barring some massive collapse. Don't be an idiot like me and others. Like, don't necessarily, like, if you're not fully convicted or have the ability to walk away from it without significant financial damage, don't go 100% all in. Don't put everything you own in it.
Yeah.
Have a balanced,
Yeah.
hedged portfolio of crypto, of real estate, of classic cars, collectibles, of vacation rentals, assets in the stock market, municipal bonds, all of those wealth building vehicles um, still make up a balanced portfolio. It's just that, I don't know, the last 13 years have proven that Bitcoin goes up at a 212% annualized return rate. It's been the greatest performing asset in the last modern history. And so if you're convicted that it will be that way 10 years in the future, now's the greatest day of your life.
Yeah.
You actually get to buy at a discount.
Now's the time to buy the Apple stock. Go
Yeah,
back in
that's
time.
right. And I think that
Yeah.
that's actually something that can at times be important to remember too, is if you go full degenerate like me, and you really go into the space and look at, like, I mean, there's 7,000 plus projects now, and probably five plus, that's probably generous. Almost all, like, maybe there's 300 that right now have a legitimate use case and have staying power, and maybe that's generous. Netscape was the first browser. It wasn't Google.
Yeah.
Netscape had the market share dominance, and it wasn't Google. Then it was AOL and Yahoo, and it was
Actually, those
Excite and
two
Ask
just sold.
Jeeves. What's that?
Those just two sold. Yahoo and AOL just sold for fractions, and those were growing up. AOL was that was it, and so
That's right.
now, so that could definitely be the way with crypto. Like there could
Absolutely.
be, or look at Facebook. You was MySpace before that, and
Yeah.
then we all landed on Facebook. So
And the beauty is
you're
you didn't
absolutely
have
right.
to get it right, right? Like,
No,
you don't have to get it right. You just have to be willing to pivot if
yeah,
you're less right, or you have to have that diversity portfolio, right? So,
I'm
I'm
still
not
on
fully con.
MySpace. No,
Yeah,
I still hang out on MySpace.
I still try to find my MySpace. I can't find my old MySpace profile. I'm not gonna lie. I definitely looked last week out of pure curiosity, and did not find it.
If I find your old MySpace,
Oh, we should share it.
what song is playing right now? If
I don't know if I have the song now. Now I really hope we find it and then share it on the YouTube version of our podcast, because I'll probably be embarrassed what a giant meathead I was, and my MySpace probably reflects that. So
yeah,
what would that have been, like '05 maybe?
yeah, I
So
think mine's Jay-Z, like the blueprint probably would be. I don't know. I don't
I want to find yours.
know. It's probably on there.
But that's the beauty of crypto though, is that, like, okay, blockchain probably does, or sorry, Bitcoin probably remains relevant as the gold of the crypto community, but Visa has a hell of a business and a heck of a lot of market share on daily spending transactions. And it's because it's a lot more portable and usable and convenient and trusted, more than gold is, oddly enough. And
Yeah,
and so Visa has a ton of value and a ton of throughput usage, despite the fact that gold also has value. And so there is a use case for looking at projects that are alternate to Bitcoin in this space. Just know that you're gambling on, is it going to be Discover? Is it going to be MasterCard? Is it Visa? Is it American Express? Is it Diners? I mean, that's what it looks like when you diversify into the degenerate spectrum of cryptos. Is now you're betting on who will take market share for use case in the future, and it's a fun space to be in because the gains are bigger, but so are the crashes. I mean,
yeah,
there were some yesterday that fell 60, 70%, but they also had 1,500 to maybe 5,000% gains in the last 12 months. So you go up a lot quicker, and you fall way harder in those altcoin markets.